Well, let's check in on the markets. Markets in the Asia-Pacific region were mixed following Wall Street's solid rebound rally overnight. Investors will be closely watching Federal Reserve Chair Jerome Powell's speech as markets brace for another 75 basis point hike later this month. The European Central Bank is in focus today, with the central bank due to announce its latest monetary policy moves. It's expected to front-load a series of rate hikes and sacrifice growth in the region in light of the rising cost of living, which is threatening to surge even higher. However, to talk to us about the latest when it comes to the markets, we are joined by Cornette van Zyl from ABSA Asset Management. Cornette, thank you so much for your time. I mean, what's driving markets right now? Because wherever you look, you're kind of not sure whether to interpret, good news as bad news and bad news as good news. So how are you reading what you're seeing on the screens?
Yes, good afternoon. So definitely a bit of a recovery on the JSE today. We are following global markets higher. We had a strong day yesterday in the US on the NASDAQ. It was up more than 2%. And here locally, most indices are actually in the green: resources, industrials, financials. The rand is staying under pressure though, more than the 17.40 to the dollar, a bit of dollar strength coming through, I would suspect. And I think just a little bit of risk-taking coming back. People are just a little bit more optimistic. Global markets have been under pressure for the last week or so. So definitely a bit of a recovering and a bit of risk-taking, I think, coming through today, Nastasia.
Locally on SENS, we had insurer Sanlam reporting their earnings. I mean, what did you make of the performance?
Yes, so it looks like a solid result in a difficult environment for them. They reported earnings up 7%. And bear in mind, insurance companies are impacted by global market moves. And as we've just said, that's been under pressure the last 6 months. And their balance sheet looks strong. They're sitting on about 6.6 billion rand of discretionary capital, which at this point they can use to deploy into the business for growth, or possibly return to shareholders in the form of higher dividends. So I think the best result that we've seen from the life insurance sector so far in this reporting season, and the market liking it. The stock up about 1.3% the last time I had a look at it.
So we were having a conversation with our guest yesterday from an markets perspective side, and the conversation was around when other investors are feeling bearish, would now be the opportunity to start being a bullish, or is it a wait and see approach?
Yeah, so we've had a mixed bag in the sense of results that came out. So we spoke about Sanlam, which I thought was quite good, but we also had Capitec's trading statement this morning, where growth is slowing, and that stock is down nearly 8% the last time I had a look. And if you recall, there were other results when Old Mutual reported earlier in the week. We had a significant share price correction. Similarly, yesterday when Discovery reported, they skipped their dividend again, nearly a 10% correction there. Shoprite, something similar, but there are also good results coming out. Woolies, some of the apparel retailers, we had a trading statement from Foschini yesterday. Those stocks all going up nicely. And I just mentioned Sanlam a little bit earlier. So I think it's not a case of being completely bearish. I wouldn't be bullish the overall market just yet, because we are still hiking interest rates across the globe. You spoke about the ECB. Expectations is for them to put up interest rates by 70 basis points, in fact, very soon, a little bit later today. And hiking interest rates, high inflation, those are not conducive conditions for risk assets. But there are certainly opportunities within stocks that are looking interesting. So we particularly like the South African banks, which are benefiting from interest rate hikes. We do like some of the larger insurance companies. We have positions in the apparel retailers here in South Africa, something in sort of the industrial space. Some of your mid-cap industrial companies here in South Africa also looking quite cheaply valued at the moment. But we are a little bit more cautious on things like resources, for example, where you have sort of global growth concerns and that possibly slowing playing in. So it's not an all fall down and an all bearish situation, but I think you have to be careful and you have to pick your stocks quite carefully from this point onwards.
Let's take things stateside for a bit. I mean, everybody anticipating the Fed chair 75 basis points at the next meeting. Do you believe that this Fed can achieve a soft landing, or is it a case where it's too early to be able to express that kind of sentiment in this market?
Yeah, I think I might cop out on that one and say it is a little bit too early. But just to sort of explain that, I mean, it will all depend on how quickly the Fed can bring inflation in the US under control. So bear in mind, their long-term target is 2% for an inflation rate in the US. They are above 8%. So to bring it down, you can expect some aggressive interest rate hikes coming through, and we've seen some of that coming through already. Now, the question is how much you can slow the economy down without putting it under too much pressure and without causing significant increases in unemployment. So far in the US, the economy has held up well. The unemployment rate is still at very, very low levels in the US. So far, we've been seeing a so-called soft landing. The question is, how long does this continue? And that's not just dependent on factors that the Fed can control. It is also dependent on many global factors, commodity prices, the war between Russia and Ukraine, stimulus in China, for example. So I'm going to politely cop out, but for good reason, because there are so many factors, and say it's probably at this stage too early to call how much pressure the economy in the US will come under to reach that 2% target of inflation.
On that note then, before I let you go, speaking of, the US economy, what does that mean for your assessment of US company earnings going forward? Would you be expecting earnings revisions?
Yes, so all else being equal, yes, you would expect earnings to be revised downwards because the economy is slowing. But that said, inflation, the last print that we got of inflation in the US was actually inflation starting to slow. And I mentioned the very low unemployment rate still in the US, which means consumer demand in the US is still very high. So it's a difficult one to answer. You would say all else being equal, we should be seeing earnings revised downwards, but there are some factors that looks like it will be softening the blow a bit, and maybe earnings hold up a little bit better than we all expect at this point.
Cornette, thank you so much for your time. Let's leave it there. That is Cornette van Zyl, as an investment analyst at ABSA Asset Management, giving us her perspective on the markets. Of course, everyone paying attention to that ECB announcement, expecting 75 basis points. We'll unpack that for you tomorrow. That is it from me. I leave you in the capable hands of my colleague Nombumulelo Siziba. Goodbye.